What's up, fellows? In today's video, I'm gonna be sharing with you how to do forex trading in Kenya. I'll be going through all the concept of forex trading, and make sure that you watch till the end so that you can understand what forex trading is and how you can make money with forex trading. And in subsequent videos, I'll be going through each and every concept of forex trading so that you can understand and also learn how to do forex trading as a beginner. So make sure that you subscribe to this channel and also like this video. Now, let's dive into my presentation so that I can share with you what you need to know about forex trading for beginners. Forex or forex exchange involves trading of currencies. This is where you profit by correctly predicting whether one currency will rise or fall compared to another currency. So there are some key terms you need to understand in order to succeed in forex trading. That is currency pairs, PIP, spread, leverage, and margin. And we also have lot size. In the next session of this video, I'll be touching on this, explaining each and every of them so that you can understand. So for you to trade, you need to do market analysis, and that is through fundamental analysis, where you analyze economic news and release. And then we also have technical analysis, where you analyze chart patterns. Like for this one, the gold against US dollars. You need to understand how to analyze such a market. The next thing you need to know is choosing a reputable broker. A broker is someone who will help you open a trading account. So for you to open a trading account, you must open it with a reputable broker who is licensed by the Capital Market Authority of Kenya or any capital market authority in your country. Then choose a trading platform. Mostly you start with MetaTrader 4 if you are trading currencies and also gold. Also, we have fee and spread. If you are just getting started, look for a broker with lower fee and spread, and also commission. These are fees that they charge you per every trade you take. And also we have account type. Are you a small trader? Look for an account for small trading. Each and every broker has a different account type. So for just beginners, you choose for beginners, and then you'll keep changing as you progress in the trading journey. Also consider customer support. Ensure that your broker offer responsive customer support. So now you have already understood what forex trading is, and you want to open an account. So for you to open an account, you just need an email address, your name, and also ID card for you to verify your account, and then a bank account or an M-Pesa account, or where you'll be able to deposit and withdraw money to. Then now, after depositing your money, the next step is to discover a trading strategy. And for you to do trading, you learn from others. I'll recommend to use some channels in the description that you can follow if you want to make money with forex trading and the best trading strategies. Also, you need to learn about risk management, about stop loss, and all this is in the trading strategy. We also have demo account. So before you even open a demo account, understand about trading strategy. Go and watch videos on how to trade forex, and then you can now open a demo account. So after opening a demo account, you can now start trading. Apply your trading strategy, analyze the market, place a trade, monitor, and adjust. After that, now let's go into understanding the concepts that you need to know for you to trade. And we'll start with currency pairs. So currency pairs is something like Euro USD. This means that you are trading Euro against US dollars. So you are either betting that the Euro will go up in the value compared to the dollar, or it will go down compared to the dollar. That is a pair. Pair means two. For example, we have gold and USD. That is a pair. Now understand pips. So for you to predict that a market is going up or down, you need to know by how many pips. So for you to measure movement of a currency pair against another, we use something called pips. This is tiny units that measure how much currency value has changed. Let's say for Euro USD goes from 1.1000 to 1.1001. Then we have 1 pip movement. Pips are usually the last decimal place in the price. So in any pair you are trading, make sure you know the last decimal place is where. So for this, it's in the fourth one. And for gold to USD, it's in the second one. That's the last decimal place. Pips help you calculate your potential loss and profit. Even small changes in pip can mean big money when you are trading large amounts. Now, let's go into lot size. So in Forex trading, a lot is simply a standardized unit of currency. Think of it like buying eggs. You don't usually buy just one. You buy in cartons of 12 or dozen. In Forex, lots are usually used because currency values changes in tiny increments. So they are so tiny. So for you to magnify your profits, in Forex, we trade in standardized units instead of single units because it won't be practical because the movement is so minute. So we trade in standardized units. And there are 4 types of lots. That is standard lot. This is the largest and biggest and the most common lot size. It represents 100 units of the base currency, the first currency. For example, Euro USD. So Euro. So if you are trading Euro USD, one standard lot means you are trading 100,000 euros against US dollars. So we have mini lot, which is 1/10 of the standard lot. You divide it by 10 and you get 1,000. We also have micro lot. This is 1/10 of the mini lot, like that. And mostly you will be using standard lot, mini lot, and micro lot. Rarely will you use this one because it's significantly small for you to see a result. This is the smallest lot size representing 100 units of the base currency. Now, let's go into understanding other concepts. That is spread. Spread is the smallest difference between the price at which you can buy a currency pair and the price at which you can sell it. Think of it as a fee your broker charges for each trade. If, for example, you are trading Euro USD, buy price is 1.1002 and the sell price is 1.1000. The spread is 2. So you need the price to move in your favor by more than the spread to make a profit. So for you to make profit, you need the Euro USD to go to even 1.1003 and above. And it's simple, guys. When you get into a demo account, you will easily understand it. We also have leverage. Leverage is like borrowing money from your broker to trade larger amounts than you could normally afford. It can magnify your profits as well as your losses. So if you use a leverage of 100 to 1 leverage, you can control 100 units or a position of 100,000 units with just 1,000. So you need to deposit $1,000. So in case you want to trade with the standard lot, then you need a leverage of 100 to 1 if you are depositing $1,000. So for mini lot, you just deposit $100 if you are using a mini lot. You see? So for leverage, I'll also make a video so that you can easily understand. And let's now go into margin. Margin is the amount of your own money that you need to put to open a leverage trade. It's like a deposit. So how much you need to deposit into your account for you to open a trade. So if you want to open 100,000 trade with a leverage of 100 to 1, your margin will be 1,000. So you deposit $1,000. So in case you want to open now 10,000 trade position, then you'll deposit $100. So you need to have enough margin in your account to cover any potential loss. If your losses get too big, your broker might close the trade, and that is called margin call. That's why you learn some concept about stop loss in order to protect your account. Now, in terms of pips, I told you you need to know the last decimal place of the currency pair you are trading. So, for example, you can see in gold, we have 2 decimal, and a pip start with the last one. So, for example, the price of gold moved from 1800.50 to 1800.51. Also, the lot size really matters. The value of pips changes depending on the size of the trade. So for gold, the standard lot size is 100 ounces, but for currencies, it was 100,000. So some brokers might show gold prices with more decimal places, but when it comes to pip movement, consider only 2 decimal. Imagine you are buying and selling gold like you would like to buy and sell any other commodity. The price of gold goes up and down in every small increment. These small changes are measured in terms of pip, and each pip for gold is what? $0.01. So if the price of gold goes by 10 pips, you will multiply it by 0.01. And if your lot size is 0.02, then you will multiply with it will be 0.2. So understand that the decimal place of your pair really matters when calculating the pip size. Now let's go into an example so that you can understand more about lot size. Let's use gold for example. Gold against the US dollars with a lot size of 0.01. The lot size is 0.01. So this one times 100 is 1. And when up, so 1 pip will mean 1 times 0.01, and you'll get a pip value of 0.01. Let's now go with a lot size of size 1, meaning 100 ounces. So to calculate this, a pip movement of 0.01 times 100 ounces will be $1. So every time it moves from 0.50 to 0.51, that is going to be a pip movement worth $1 if you are using a lot size of 1. So for you to understand lot size, I'll also make another video so that you can be able to really grasp this. The small changes, how to know a pip size. Let's now go with an example of a currency when calculating the pip value. For example, if you are using a pip size of 0.01, that is 0.01 of the standard load. That is 1,000 units because you multiply 0.01 times the standard, which is 100,000, and you will get 1,000. So, and the pip movement for this is 0.001. That means that per every pip, if you are using a lot size of 0.01, then the value will be 0.1 for every pip movement. Same case to a lot size of 1, meaning you are using the standard load. Every pip movement will be what? $10. So, in case you want to learn more, make sure that you subscribe to this channel because I'll now give you examples and more concept about Forex trading so that you can understand how to do Forex trading in Kenya.